All right, so you've learned all the concepts of trading the futures market, and now you think you're ready to start pulling the trigger and actually start trading on the futures market. One thing that you have to consider or to take into consideration is selecting the right trading pair. In this class, I'm going to be discussing which trading pairs you should be using, the ones you should be avoiding. Now, if you've been watching from class number 1 to class number 20, you realize that maybe in the past 2 months or a month or so, I haven't been able to upload here on YouTube. That's simply because I felt very ill. I was very sick, but now I'm back. I'm very healthy again. I added more classes, which means I will now be sharing with you my trading strategies, what you have to look out for before you start trading, you know, the certain things that you have to come through before you start, you know, placing that long or short position. Now, all the classes will be deployed this week here on our YouTube channel. So stay tuned, because this week we're completing everything with regards to the course. And now let's get started. These trading pairs are also based on the amount of money that you currently have on your trading account, because some of these trading pairs makes it easy for you to actually calculate how much money you'll be making or how much money you'll be losing in terms of a dollar value. I know some traders actually like to look at this in terms of percentage. It really depends on your trading strategy. The first trading pair that I want to talk about, maybe even before we get to that, I want to talk about trading pairs that you should be avoiding, or cryptocurrencies that you should be avoiding. If you look in the world of cryptocurrency right now, you can see about 20,000 cryptocurrencies already exist, but only a fraction of those are available on the futures market. Even though it's only just a fraction of those that are available on the futures market, it's really imperative for you to understand that some of these cryptocurrencies are relatively new, which means that they are easily manipulated. You know, when a new cryptocurrency hits the futures market, the founders of those cryptocurrencies, or the people who hold majority of those cryptocurrencies, they have a huge incentive to actually go and dump the cryptocurrency on the spot market, then pushing the price lower, obviously shorting the cryptocurrency on the futures market. They have huge incentives, because when you're trading on the futures market, you can trade from 30x, 25x to 100x. So which means that if they dump this thing on the spot market and short the very same thing on the futures market, they stand to actually make more money. So you want to stay away from trading cryptocurrencies that are relatively new and just got, you know, recently listed on the futures market. And also, when you're trading these cryptocurrencies, you need to look at who owns what, who owns majority of these cryptocurrencies, and what will be the incentive for them to actually dump the coin on the spot market. And also look at the team, how many percentage do they have, because once these tokens are actually available to the team, they can obviously go and dump them on the spot market, because they actually got these cryptocurrencies for free. So firstly, you need to do your research with regards to who owns what majority of those cryptocurrencies, and also you can use this tool to actually look into the smart contract and see when is the next release of the coins that are actually available, because whenever these new coins are actually released, they make their way to the market. Obviously, that's going to create a downward selling pressure. That may be a good indication for you to actually look at that as a leading indicator for you to actually short the market, because you know, once these coins or these tokens are actually released and they make their way to the spot market or to the hands of the founders or early investors, whatever the case may be, it's going to create a downward selling pressure. So maybe you can use that opportunity to actually short the market. Like I said, this is not financial advice, but this is just a great tool that I wanted to show you guys, where you can actually see when is the next batch of these cryptocurrencies, when they're going to be released. Now back to the top 5 cryptocurrency trading pairs that I'm actually looking at whenever I'm trading. Before we get to that, whenever we're talking about a trading pair, we're talking about maybe Bitcoin to USD, and most cases I'm pairing Bitcoin or whatever cryptocurrencies with a stable coin like USDT, USDC, BUSD, and basically just stable coins that are relatively stable, nothing like UST, because that is just one stable coin that just went to zero. So you don't want to be trading with stable coins that are not stable, or algorithmic stable coins. So the best trading pair obviously is going to be BTC USD or whatever BTC USDC. Also, this depends on how much money you actually hold on your account, because Bitcoin fluctuates within a day from, you know, a price of 1,500 to 2,500 US dollars. So when you're actually trading with a bigger size account where you can actually hold a position of 1 Bitcoin on your futures contract, that's when you can actually make more money, because as Bitcoin fluctuates, it's actually creating this room for you to actually make anywhere from 500 to 2,500 within a single, you know, movement, because we know these markets are very volatile. So within these key points here, that's when you can actually be making anywhere from $500 to 2,500 US dollars, obviously depending on the trading strategy that you're actually using. Speaking of trading strategies, make sure that you check out the video coming up next, because on that video I'm going to give you my trading strategy, how I plan my trades, how I execute them, all that stuff, so you don't want to miss that. All right, so the next pair that we want to look at is Ethereum. Ethereum is also one of the well-established cryptocurrencies, which means it cannot be easily manipulated, so you can easily trade it on the futures market. Ethereum is even a cryptocurrency that is acting as a leading indicator for most cases. So Ethereum will first do the move, then the rest of the cryptocurrencies like Bitcoin and other altcoins will actually follow what Ethereum is doing. For the past 2 years, Ethereum has been acting as a leading indicator in the world of cryptocurrencies. So even if you're not trading Ethereum, you can always have it on your watch list so that you can have a look at what Ethereum is doing and then anticipate on what most likely will happen to the rest of the cryptocurrencies. So you can use this as a leading indicator. The next cryptocurrency that I trade on the futures market is ADA. This is also where I make most of my profits. I know a lot of people, you know, were criticizing ADA, saying that it's a stable coin, it doesn't move as much as other cryptocurrencies, and there is some element of truth to that. However, I looked at that, you know, when people are saying, you know, a cryptocurrency is a stable coin when it isn't. I looked at that and I said to myself, look, this cryptocurrency is predictable, which means even if it goes up or down, it cannot, you know, fluctuate as much, and that actually reduces my risk as a trader. So when I'm trading ADA, I'm only taking advantage of a small price movement, because I know for sure that this cryptocurrency will less likely, you know, fluctuate or be extremely volatile. So for that reason, I end up, you know, getting most of my trades right when it comes to trading ADA. Cardano is also one of the cryptocurrencies that cannot be easily manipulated, because we've got a lot of ADA that is sitting on stake pool that is securing the network. So for that reason, you know for a fact that this cryptocurrency is not going to be affected, you know, by people dumping the cryptocurrency on the markets, because most of these coins are actually sitting in stake pools. Moving right along, let's move to Matic. Matic is one of the most exciting cryptocurrencies that you can trade on the futures market, provided that it goes in the direction that you actually predicted, because Matic is extremely volatile. Not only that, when it actually moves, it moves with high momentum. So you need to be very careful and make sure that you're trading support and resistance. That's the only way you can actually, you know, win and make a lot of money trading Matic. And it's also one of those stable cryptocurrency in the sense that it cannot be easily manipulated. All right, so now we know that these are the pairs that we should be trading when we're trading the futures market, or at least the trading pairs that I'm actually trading when I'm trading the futures market. But which one should you avoid when you're trading the futures market? Well, we're looking at cryptocurrencies that are relatively new, that have, you know, been recently launched and recently being listed on the futures market, because in that case there is a huge incentive. Like I said previously, when you look at cryptocurrencies, let's take for example STEPN. This cryptocurrency, when it was introduced, there was a lot of hype around the project. I almost made a video with regards to how to, you know, earn STEPN with regards to play to earn, and I did my research, and after I did my research, I realized, look, there's something fishy here, let me wait. But I will make a video on that and tell you guys exactly why I didn't, you know, jump on the bandwagon when it comes to STEPN. But this is the perfect example, because you can see how significant this cryptocurrency has dropped. Now, one of the reasons that made me not to participate on STEPN was simply because I realized that it was now listed on the futures market, which meant there was a huge incentives for people who are holding this cryptocurrency to dump it on a spot market and short the very same assets. I'm not saying that has been the case. However, when you're looking at, you know, the smart contract, when you're looking at the tokens that are going to be released, like I said earlier, when these tokens make their way to the spot markets, they actually create a downward selling pressure. You can use these tools to actually find out which date is going to be the release date for a specific cryptocurrency, then you can use that to actually short the market, because in most cases, once these cryptocurrencies, or rather once these coins are released to the founders or early investors, they will go directly and sell them, and then obviously that's going to create a downward selling pressure. You can now go on a futures market and maybe short that asset. You can use this tool to actually look at the smart contract and see when is the next release on these cryptocurrencies. In the next video, I'm going to go in depth with regards to the best exchanges that you can use to trade the futures market. That video is going to be showing up right here. If you haven't already, make sure that you give this video a like. If you have any questions, leave a comment on the comment section below, and I really appreciate it if you can smash that subscribe button and turn on all post notifications. So go ahead and join me on the next class where we look at the best cryptocurrency exchanges that you can use to trade the futures market. I'll see you there. Cheers, viewers. Bye bye.